Here is a striking split screen. On Thursday the 30th of July, 2026, Bitcoin is holding near $64,000, going almost nowhere, while equity investors are cheering Microsoft and pushing technology-heavy indices higher. Two of the biggest risk assets of the last decade, telling completely different stories on the same day. That matters, because for most of this cycle the assumption was simple: if the Nasdaq rallies, Bitcoin rallies harder. That relationship is loosening in front of us. Bitcoin at $64,000 sits well below the record highs above $100,000 set earlier in this cycle, so this is consolidation, not celebration. Meanwhile, Microsoft, one of only a handful of companies ever valued in the trillions, is being rewarded for something very specific, evidence that the money it has poured into artificial intelligence is now turning into revenue. Let us unpack both sides and the numbers behind them. Round numbers are not magic, but $64,000 carries real history. It is almost exactly where Bitcoin peaked in April 2021, at just under $65,000, before the crash that followed. It also sits just below the November 2021 cycle top of roughly $69,000. Levels that once acted as ceilings often become floors, and traders position around them. What you are seeing today is compression, a narrowing daily range, thinner spot volume, and derivatives traders unwilling to commit in either direction. In practical terms, stop losses are stacked close together on both sides. When price finally leaves a range like this, the move is usually fast, because the same leverage that keeps it pinned amplifies the break. So the honest read today is neither bullish nor bearish. It is coiled. The level to respect is the range low, not the headline price. Now the other half of the story. Microsoft runs a financial year that ends on the 30th of June, which is why its fourth quarter and full year results land in late July, exactly where we are now. That timing is why today's tape is being driven by cloud numbers rather than crypto. The market's focus is narrow and specific. First, growth in Azure, reported inside the intelligent cloud segment, because that is where AI demand shows up as actual build revenue. Second, capital expenditure, which has been running at well over $20 billion a quarter as Microsoft builds data centers, buys accelerators, and secures power. Third, margins, because all that spending flows into depreciation for years afterwards. Shares are being rewarded because the first number is now growing fast enough to justify the second. That is what analysts mean by an AI payoff, capital moving from the cost line to the revenue line. So why does Microsoft's good news lift the whole equity market but leave Bitcoin flat? Because the two are now priced on different things. The AI trade in equities has an earnings anchor. You can point to contracted cloud revenue, backlog, and free cash flow. Bitcoin has no earnings, so it trades on liquidity, flows, and rate expectations. Since United States spot Bitcoin exchange traded funds began trading on the 11th of January, 2024, crypto has gained proper institutional plumbing, but that plumbing works both ways. When allocators want technology exposure with visible cash flows, they buy the cloud names, not the coin. Add the April 2024 halving, which cut the block reward from 6.25 to 3.125 Bitcoin, and you have a supply story that is real but already fully known. Known catalysts do not move markets. Surprises do, and today's surprise came from software. Here is why this matters even if you have never bought a Bitcoin in your life. Most workplace pension default funds hold a global equity tracker, and those trackers are extremely concentrated. A small handful of American technology companies now account for a very large share of the S&P 500 by weight, so when Microsoft rises on AI results, your pension valuation moves with it whether you follow markets or not. That concentration cuts both ways. It is the same reason one disappointing cloud number can knock a percentage point off a fund in a single day. There is also a currency layer, because those holdings are priced in dollars, so the pound's level against the dollar changes what you see in sterling. On the crypto side, UK retail investors have been able to access crypto exchange-traded notes on the London Stock Exchange since the Financial Conduct Authority lifted its retail ban in October 2025. A flat Bitcoin price has a sharper edge for one group, miners. After the halving, every block pays 3.125 Bitcoin plus transaction fees, and blocks arrive roughly every 10 minutes. When the price stalls but network difficulty and energy costs do not, the revenue earned per unit of computing power gets squeezed hard. That is why several listed miners have spent the last 2 years converting parts of their sites into hosting for artificial intelligence and high-performance computing workloads. It is a striking irony, the same AI demand lifting Microsoft is now a lifeline for miners struggling with a flat coin price. For traders, the impact today is different. Low volatility means options are relatively cheap ahead of any breakout, and funding rates on perpetual futures sitting close to neutral tell you positioning is light rather than one-sided. So where does this go next? In the near term, watch 3 things. 1. The range. Until Bitcoin closes decisively outside its recent boundaries, treat moves inside it as noise. A daily close well above the range high argues this consolidation was accumulation. A close below the range low puts lower support back in play. 2. Exchange-traded fund flows. Daily net flow data for the US spot Bitcoin funds is published every trading day, and a run of consistent net inflows has been the most reliable tell for sustained upside in this cycle. 3. Capital expenditure guidance from the large cloud providers. If Microsoft and its peers keep raising planned AI spending while revenue growth holds, the equity AI trade has fuel. If spending climbs while growth cools, the market will punish it quickly. Note too that tomorrow, the 31st of July, 2026, is month end, when index rebalancing can distort a quiet tape. The takeaway is this. Today is not one story, it is 2 markets priced on 2 different logics. Microsoft is being rewarded for turning artificial intelligence spending into measurable revenue, which is a cash flow story you can model. Bitcoin near $64,000 is waiting on liquidity and flows, which is a positioning story you can only monitor. Do not force a correlation that has stopped working. If you hold a global tracker or a workplace pension, understand that you already own the AI trade, probably more heavily than you realize, and that concentration is a risk as well as a return. If you hold Bitcoin, respect the range, size positions for a fast move in either direction, and remember that quiet markets rarely stay quiet for long. None of this is financial advice, so always do your own research before acting.